Hello and welcome everyone again to our weekly commentary at StashAway. It's myself again today, and I have with me our Chief Investment Officer, Freddy Lim.
Hi.
Today we have a couple of exciting topics to talk about. A lot of things happened last week on the political front as well as on the investment front. So we'll get into those here in a few minutes. But before we do so, just want to raise a couple of events that we're having coming up over the next couple of weeks. For Singapore, we have a really exciting topic. It's going to be financial planning for women. It's going to be panel style. It's on the 21st of May at 7 p.m. here in Singapore. You can find out more about that if you go to StashAway.sg/academy. You find out more information about the event. You can sign up for it. You also see all our other events that we have in Singapore available. And then also exciting for our Malaysia crowd, actually, Freddy is going to be in Malaysia next week, and you're going to be talking about our asset allocation framework.
That's right.
That is going to be on the 30th of April, so that's next week Tuesday. That's going to be at 6:30 p.m. and you can sign up for it on our StashAway.my for Malaysia/Academy page, as well as on our Eventbrite page for Malaysia as well. So we hope to see as many of you as possible. I think both of these events will be super interesting. We usually have a very good mixed crowd, so there are always very good conversations during those events. So that's for StashAway Academy. For today, Freddy, a couple of things we wanted to get into. One will be kind of the earnings that have been coming in over the last few weeks. We'll talk a little bit about what happened to oil, right? That was in the news since the weekend. Singapore gave a little bit of an economic update. We're going to talk about that. And then what I'm actually excited about to talk about afterwards is kind of like a kind of lesson to be learned for our listeners, right? It's going to be, we're going to talk a little bit about geographical diversification and what a lot of people do as the home buyers, right? But for everyone else, let's get started. Let's give a little bit of update on the earnings, because that directly impacts, your holdings and your investments and stuff like that, right? So maybe you can give us an update on that.
Well, the good news is almost 80% of S&P companies have exceeded analyst estimates or analyst expectations. So there's a fantastic news and a big turnaround from the hangover from 2018. In particular, last night we have earnings announcements from Hasbro, Lockheed Martin, and even Twitter. All of them have massively outperformed analyst forecast. So earnings are resurging again, and that's a really good news for growth-oriented assets.
It's very interesting, actually. You said Hasbro, Lockheed Martin, Twitter, three completely different spectrums of the consumer, right? You have technology, Hasbro, which is really like consumer spending, right? Like,
that's right.
Where this is where your dollars of your paycheck goes to your kids' toys and stuff like this, right? And you have also the defense sector. So it's very broad.
Yeah, so despite all the naysaying we've been hearing since forever in the media, the rally is now broadening its reaches to different sectors of the economy. So the scope and breadth of it is what really is comforting for investors going forward.
Do you think though that that's because the expectations have been lowered so much? So are they actually good numbers, or are they just because last year at the end of the year, right, most of the analysts actually and the companies been telling everyone, hey, we need to calm it down a little bit? Yeah,
that's true. Analysts were way too optimistic or aggressive in their expectations last year, and now they have revised it down. But mind you, CEOs of companies are smarter in this round, so they managed them downward the last time, and right now the number surprises on the upside. And more importantly, in terms of outlook, in terms of business planning, the sentiments among CEOs of companies have also improved from the last quarter. So I believe there's no more management of expectations here. It's pure, real good, solid earnings.
Yeah.
That's the real good news going forward.
Yeah, no, really, really good numbers again. Same from my perspective. Then oil. I think oil was a pretty interesting topic over the weekend and coming into this week, because Donald Trump, right, said he's going to do something to Iran. Maybe you can explain what he said, what the implications will be for the world in terms of oil supply and.
Well, the wrath of Donald Trump has been always there for the oil markets, but it didn't stop it from rising either. And in fact, Trump has made it worse. by removing the waiver on Iranian oil exports. So a lot of countries that got temporary exemptions on the sanctions on Iran. So last year they were still able to import Iranian oil, now they can't.
Yeah.
So the supplies has got tightened further, and markets are just basically skeptical about the ability of Saudi Arabia and even Russia to meet the gap. Right, especially when we have Venezuelan crisis, Libyan, also there's a Libyan crisis, right? Lots of fighting and tensions between the militant groups by Khalifa Haftar and Tripoli is under attack, right? There's a lot of tension in those countries and making the supply disruptions more real as a risk.
Yeah.
So the upside for oil in the near term is still skewed towards the upside.
Yeah, and then which is interesting to see, because Donald Trump always says, hey, we need to have low oil prices because he needs obviously middle America, trucks, SUV, you know, like this is direct impact on his voting base, right?
That's right.
So it's a really important topic for him normally, right? But this time was him actually saying it, because for long-term implications, right?
Well, at some point, if oil sustain its rise for too long, I think equity investors have to also think twice about how higher cost of production could feed into earnings. But right now, earnings momentum is so strong that the market simply struck off the oil rise and just plow on forward. So this environment is pretty positive for the rest of 2019.
2019 for sure, yeah. Okay, good. Well, thanks, Freddy, for the oil update. I think that puts it in perspective a little bit better than just listening to the pundits on TV, right? So then the third topic we want to talk about is to take it a little bit home before we go into home bias, but take it a little bit home in the news. What about Singapore and the economic update?
Well, the latest GDP for Singapore was 1.3% year on year, and that is the softest GDP number for Singapore over the last 3 years. And it's even slightly below analyst expectation, which is 1.4. And the particular weakness in the number came from a big slump in manufacturing. In particular, precision manufacturing and electronics have really been a big dominant negative driver for the sector. And in fact, manufacturing went down from plus 5.3% to minus 1.9% over just on a year-on-year basis. Big slump in manufacturing. So overall, people may start reading it as a very negative outlook for Singapore, but I do beg to differ.
Okay.
As I always said, these numbers are a little bit lagging, and the news already talk about it for a while.
Yes.
Right? Samsung Electronics slowing down and all. These are not new news. The trade war's been there, so business owner, manufacturers are scaling back their plans until there's more clarity on the trade talks between the US and China. And we do have a lot of progress on that front.
I was going to ask you about that.
Yeah. So we have progresses, and as you know, Litizer and Nguyen is going to head to Beijing next week to continue the trade talks.
And that's high level, right? That means there needs to be, they're getting hopefully closer to at least some drafting agreement kind of thing.
That's right. So there's some silver lining among all this negative news. And also in terms of looking at the more forward-looking indicators in Singapore, if you look at the Purchasing Manager Index for electronics, so which is like what manufacturers are thinking ahead in their capital expenditure, their business budget, is actually, we are seeing some modest uptick in those forward indicators. So the news has been there. There's some stabilization going forward. I think Singapore is poised for a better second half of 2019.
Well, that's good news, right, for local investors. So we always preach, and I think this is where we come to like the kind of the takeaway learning for today, right? We always talk a lot global news, and we don't talk too much always in particular countries only, right? There's a reason for that. It's because we're global investors. We like globally diversified portfolios. But a lot of people, it doesn't matter. This is not a Singapore specific issue, right? This happens. I know friends in Germany. I know Americans.
Yes.
Normally, it's 80 to 90% of their portfolio is home country.
Yes.
Right? And the rest is then internet, because they think they know the market. Like, you know it, right? I know BMW, right? But that's what people think, right? In their home country.
Right.
So maybe we can talk a little bit about this and what are some of the risks of home country bias and why you should not have that.
Well, the home country bias is psychologically understandable, and people may also think that they retire at home, so they don't want to have any exposure to global currencies. Those are valid intuitive reasons. But what's missing in the fact is that when you have home country bias, you subject yourself to a very concentrated sort of investment exposure to just one nation. And in particular, as we know, Singapore is a good example. The market's not been very easy over the last 3 years at home, right? It's just a matter of a cycle being less aggressively positive than the US and the rest of the world, right? So a global diversified portfolio removed that sort of situations. I think you can also go further than that in terms of how StashAway actually manages the portfolio. We actually looks at a lot of past global systemic crises that has happened, and we always find that the safe haven currencies like US dollars, Japanese yen, Swiss franc, they do outperform most other currencies in the world in times of crisis. And those are very interesting factors to build into your portfolio so that you can enhance the resilience of the portfolio, can enhance the risk management aspect of your portfolio by doing some sort of a global allocations. So home bias is actually not a very good long-term solution to your goals. It's better for you to build in some sort of a buffer and diversification to geographies.
Yes, no, absolutely, and I think this is what you were just talking about, right? It's about having it's not just having stocks in that country, right? It's also currency. I think that's this is one of the most undervalued propositions, right? And then on top of that, you normally real estate is also in this country, right, where you live in, right? So that you already have a lot of assets actually in your own country mostly.
That's right.
Right. So then the next.
Yeah, you may have deprecated even more exposure if you put in your pension plans into considerations and your cash holdings, and so that's a lot of duplication, and the home bias gets even worse than you realized.
And in Singapore, not so much, but in other countries, the depreciation of the currencies, works against you too a lot,
That's
right? This is very interesting. Well, good. Hey, thank you, Freddy. I think this was super interesting because we haven't really covered that topic of home bias and geographic diversification at all. But I think for the Malaysians, if you want to learn more about this a little bit, it's actually Freddy was going to have that part in his portfolio as well, and why you should have some currency exposure outside of your home country next week in Malaysia, right?
Yes.
All right, well, everyone, thank you so much for listening. If you have any comments, questions, whatsoever, please feel free to drop them down in the comment section here. Happy for you to also send us an email to support@stashaway.com, and one of our support team, or Freddy and myself, will cover them over the next few weeks. Otherwise, have a great rest of your week, and we look forward to speaking with you next week. Bye-bye.
Ciao.
Bye.